Good morning, everybody. Welcome to the Game Plan. Of course, I'm Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. Happy Monday to each and every one of you. It's time to focus back on the charts, the data, and the technical levels, ignoring emotion, ignoring the narratives, ignoring the hype. So over the weekend, we had some news. We had the Warren Buffett, big Berkshire Hathaway meeting where he ripped tariffs and talked about potential major catastrophes in the economy. Overall, he is retiring, giving it to another gentleman that was right behind him. And again, at 94 years old, Warren Buffett is hanging it up. On other notes, we saw OPEC increasing oil supply. So OPEC Plus saying, hey, we're going to increase production. Oil is dropping today. Remember, we've talked about the bear flag on that chart that had already started to play out. Oil is down again. We can look at a downside target for where this ultimately will end up. We have news out on the tariff front. Trump imposing 100% tariffs on movies made overseas. Netflix, which was into a key parallel channel, is taking a hit today, folks. Again, if you've been following along, I've highlighted this chart as, again, Netflix had gone parabolic from basically just before their last earnings when it was released in a memo that they were aiming to become $1 trillion company. It went straight up into the upper trend line of a parallel, and today is getting slammed down to the tune of over $50 to the downside. So let's jump into the markets and see where things are this morning. This is the S&P futures chart. So again, this basically tells us in the overnight, in the early morning, where the markets are trending into the open. If we take a look here, we can see the markets closed on Friday right, I believe it was right here, right in this range right there. That was your 3:50 to 4 o'clock candle. So you can see that we are lower today. We're not exceptionally lower. It's not a massive sell-off, but basically from 5,700 to about 5,670 or just below in terms of the move. Now, notice this 5,700 level, guys, all right? So again, if we flip over to the S&P 500 chart, take a look at the daily. So we talked about where the S&P was going to likely run into major resistance. And sure enough, this gap fill was something that I've highlighted almost in every game plan and to my members for long periods of time, right? So really for the probably last 2 to 3 weeks, I've said, guys, this market looks like it's going to head higher until we get to about 5,675 to 5,700. On Friday, we went right there. All right, not only is it a gap fill, but it's a Fibonacci level as well. The confluence of levels here raised the probability that the markets could run into some resistance. And so today we are trading back down just a little bit, kind of right down here. And listen, there's nothing that says we can't consolidate and then break higher. We need to now just watch and see how price reacts here. Does it go sharply lower, or does it build a bull flag, which then would imply, based on probability and data, that you would look for another move up? I do think personally it's going to come down like this, a little bit quicker with some bounces along the way, but obviously that's all subject to change based on what the charts do. All right. So again, how did I react here? Well, as I said to you guys about is crystal clear. I said with members in smart money stocks and ETFs, I will be looking to short the S&P. That's exactly what we did. I also picked up shorts on Friday on things like Meta, which I'll show you the chart in just a minute. But again, essentially looking at charts that are running out of steam, or at least appear to be, and running into multi-factor technical resistance levels. All right. So again, a few things to pinpoint on that front. Now, if we go back to the charts, guys, we look at this and we say, okay, so what are the key support levels, right? So let's say we do start to come back down. Where are we going to start to analyze the major support levels? And for me, it's taking this COVID low and basically going right up here. So essentially, we're now sandwiched between this long-term trend line, which again is the COVID low, to the bear market low of 2022, to this bigger pullback right here in October of 2023. And we did tag it down here. And so if we come back in, the market can be looked as being range bound. So, if it comes down here, you look for a bounce. If it's up here, as long as it doesn't break and confirm above here, then you look for pullbacks. But if at some point this level breaks, the next leg begins, Your next target would be 4,600 for support here, and that would be from your pivot in 2023. All right. So again, that's obviously many steps ahead, but just a level that I'd be watching if it breaks. But as long as we're in this range here, these two, by the way, these two levels will, and we can just extend these out. If we go out further, notice how these will contract. Okay. So getting rid of this line, what does this start to form? And we can just keep going, right? I mean, you could just really extend this out, but notice how it forms what would be referred to in technical analysis as a wedge pattern. So a wedge pattern means there are two lines that are converging. One can be flat, one can be upsloping. They can both be sloping, meaning one could be downsloping. Doesn't really matter. The whole idea is you could do something like this, right? Where you come in here, but at some point in the future, we have to either break out or break down. And that's, again, going to be game time decision. What are we ultimately going to see happen with this market? Is it going to be in the near term where we break one way or the other, or is it going to take some time of sideways chop? And obviously, we're going to look towards the Federal Reserve and other factors out there in the market. Speaking of the Federal Reserve, guys, Wednesday we get to hear from Jerome Powell and the FOMC. The decision will be at 2 p.m. Eastern time, followed by the press conference at 2:30 p.m. Really, the press conference is all we care about, right? Because really, it's going to be what does Jerome Powell say about the future? Basically, when you get Federal Reserve announcements, it's earnings. It's essentially the earnings for the Federal Reserve. And I don't mean literally the earnings. It's just the market is going to say, okay, well, we expect them not to cut rates. So that's essentially what we expect for earnings, right? Okay, so they're not going to cut rates. But what is the guidance? Because oftentimes we know with stocks, it doesn't matter what they reported in earnings and revenue from the prior quarter. It's what do they guide for the next quarter, which drives the stock price. And in the markets, that's essentially what we're looking for here. We're looking for guidance on future cuts. Now, interestingly enough, prior to Friday's jobs report, the market had priced in a cut for the June meeting. So not in the May meeting, which we're coming into, but in the next meeting. After the strong jobs report on Friday, the market has now priced in that there will be no cut in June until the July meeting. So it's interesting how things changed right there with the data on the jobs numbers on Friday. Now, again, as I said on Friday, remember, we have to see what the revision is next month, right? So it seems like, remember, last month we got a number and then they revised it down about 40,000 jobs. What do they do for this next number? But it does seem, and I think we can all agree, that the numbers come in strong and then they're like, oh, wait, it was actually like 30, 40, 50,000 less. And it's just a matter of kind of, I almost want us as investors to price that in. It's almost like pricing in a number. Basically, a 40,000 revision is what I would think we would get next month with the next jobs report. All right, on to Netflix. Netflix, folks, is dumping after Trump imposed tariffs on basically any films that are made outside of the country, 100% tariffs, encouraging movie producers to shoot in the U.S., but what we see here is more fascinating to me. So if we look at the Netflix chart, the high pivot from 2023, low pivot from 2024 and 2025, and look at this high pivot here. And what did we just tag on Friday? And by the way, this is the weekly chart, so we're looking at a bigger zoomed out period. But look at where we went, and look, you have Netflix trading below 1,100. Right now, it is down about $60 in the pre-market. That's about 6% or so. I mean, give or take, right? But the point being is that this is why I absolutely adore and follow charts, is because they can guide you to expecting a move, and then magically, as if it's like you have like a crystal ball, some news comes out and the stock drops, right? And so by no means do charts tell you what the news is going to be. Like, it could have been something totally different, but amazingly, the charts guide us to expect a pullback, and then something magically occurs and creates that pullback, right? And it's about probability. So we knew that it was overbought. Bulls were way too bullish on the stock, which means there's a lack of new buyers. Then you're just kind of saying, okay, well, if everyone's saying it's the greatest stock in the world, at some point, something's going to happen that's going to dent that perception. And in this case, it was a tariff announcement on foreign films. But just so cool. I love how it's stuff that even to this day, after 26 years of trading, it's just fascinating to me how you look at this parallel and you say, okay, well, when we were at the high end of the parallel, it got rejected. Here was the low end, it had a rally, then high end rejected, and then high end again. I should say even low end popped, and then high end, boom, the stock gets slammed to the downside. All right, a trade I took on Friday on a swing trade basis was a short on Meta. Why? Well, looking at the parallel here, or even just this trend line, we have this trend line down here. Okay, we use that trend line, goes right to there, goes right to here, and then we bounced and we broke and we confirmed. And then in the short term, we just tagged the underbelly of that level. For me, at least, that kind of creates the expectation that we should see some sort of pullback here on the stock. Now, again, as I always stress to you guys, it's not necessarily a guarantee. There's no such thing as it guarantees in trading. But what there is probability. And so for me, I use the charts to guide me to what is most likely to occur. And then I don't go all in on the position, right? So I did a small position, starter position on Meta on the short side with members on Friday, just basically getting our toe in the water in case it gets fully rejected. And if it goes higher, we have other resistance levels. For instance, if we flip back to the chart here, my add level could potentially be like right here. This is a great little resistance level, pivot high right there. So that could be an add level. At some point, the idea is if you have 70% success rate that you're due for a pullback, maybe one time it doesn't work because there's still 30% times or a percent that it doesn't play out. But if you do that over and over and over and over again, at some point, that 70% probability-wise is going to play out. That's the concept behind it. Speaking of which, guys, I don't know if you guys saw, but we launched an option service. So again, options, smart money options has been launched. I hope to get out a couple trades on the option service today. I'm going to be analyzing, I was over the weekend, charts, looking at premiums, looking at different chart setups. But again, if you're interested in options, people have been bugging me since I stopped my option service a couple years ago to bring it back. And finally, we did here due to popular demand. So again, if you're on the website of verifiedinvesting.com, you can obviously go under the services and you'll see smart money options there. So that's very exciting news. A lot of people very, very happy with that. All right, coming back to a couple other charts to go over. GE, look at this trend line on general GE Aerospace. Look at the extension move up and look right into a scene of the crime. It's inside of this bigger, what we would call a megaphone pattern. But ultimately, look at this, guys, right here. This looks to be a great setup for a short on GE. So there's some good charts that are into major resistance levels. Another one, here's the SMH, which is the semiconductor. So this includes like Broadcom and NVIDIA, et cetera, because it's the semiconductor ETF. So it kind of houses all of them. But look at the breakdown and then look right here. What did we just do? Retraced right into the scene of the crime. So what does this imply? It implies we should see a pullback. And notice how the S&P, right? The S&P is up into gap fill Fibonacci level right here as well. It's implying a pullback. And then you have all of these stocks that are into levels. One, this was Meta, GE, SMH. I mean, just lots of different, essentially, sectors are all into these levels. All right, Bitcoin. All right, guys. So Bitcoin peaked above the resistance. If you know the confirmation signal that I teach you guys in the Winning Trader series, which houses all the knowledge that I have, you can see it closed above, didn't confirm, and it was essentially a fake out. So again, think of the people out there that probably thought it was a breakout. If they don't know the confirmation signal, they don't know what the algorithms are programmed to do. The algorithms are literally programmed, folks, to fool you. They are programmed to inch above key levels because, number one, they know that people have stops on their shorts just above those levels. So the shorts will ultimately get stopped out. It also coaxes in psychologically people to be like, oh, it broke above that level. I got to go long. I'm going to FOMO in, right? And then they're like, oh, nope, flip it right back down. And again, it's not to say that the confirmation signal is not foolproof, but what I found is that when you confirm a breakout, the odds, because remember, everything I do is based on probability, the odds decrease dramatically that it's a fake out by algorithms, because ultimately it takes too much money once you confirm to really go the other way. It gets too far away from the breakout level versus here, it was just a tiny little blip above. It doesn't take a lot of money to reject it back down versus if you confirm and you're up here, it's like, okay, well, how much money are these institutions going to really deploy to fake people out at that point? All right. So again, right now, this is the level to beat. It was a fantastic longer term trend line parallel from these lows, these highs. And remember, this high goes back to the all-time high from 2021 or former all-time high, and then the bull market former all-time high of 2017. Really remarkable. Again, the chart. The chart just amazes me. Here's oil, guys. Here was our down move, a break below the $65 support, which had lasted for a long, long time on the charts. And then ultimately the bear flag formation that we've discussed. And again, where did we go today? We went right into or kissing major support, getting a little bounce after OPEC essentially added production. All right. Now you might say, well, why is OPEC adding production when prices are so low? I have a theory. My theory is, number one, Trump wants lower oil. But number two, I think they secretly understand that there's no way, like if they drive oil prices up, the U.S. companies we have so much oil here in the U.S., they're going to just continue to pump oil and fill that void. So if they sell 1 million less barrels, U.S. companies will just sell 1 million more barrels, right? Whatever, they'll fill demand because we have that much oil in this environment here in the U.S. Now, the thought process is they can produce oil at, let's say, $20 a barrel. In the U.S., it's probably $50 or $60 or whatever it is per barrel. And so by pushing oil down, by them producing more, not only are they selling more, but the hope would be is that it makes it unprofitable for U.S. companies to produce as much oil. And then ultimately that causes prices to basically set a new normal. Now, for us, if you're driving, if you're, using gasoline, that's ultimately a net positive for us. But again, just a couple things to think about in terms of why is OPEC overproducing or producing more oil when oil is trading basically in the $50 to $60 range. Very interesting hypothesis there. All right. Natural gas. We'll look at nat gas, then we'll go to gold. But look at nat gas, guys. Went right into this resistance that I gave you last week. This was that next level up. It's stalling here. I am not short natural gas just yet. I was doing more research and I found a level that if it continues up, where I will be looking. The 50% fib level right here at around 395. And I want to show you what else is right there. There's a former pivot point right here that I'm going to be watching as well. Pivot low, pivot low, pivot high. So see how it broke, it confirmed, bounced into the scene of the crime right there, and then it got rejected. So it implies right here at 393 to 395, this is a trend line plus a Fibonacci retrace. There should be significant resistance there. Now, is it possible natural gas could just come in without getting there? Absolutely, it's possible. 100% it's possible. But for me, and I've said this many times over, I would much rather miss a trade, especially with natural gas and how volatile it is, than get in at a subpar entry. So if I miss the trade, I miss the trade. Just the nature of trading. I miss hundreds of trades every single day, frankly. All right, lastly, gold and silver. Let's touch base on gold and silver. Gold is getting a beautiful bounce. Remember, last week I got out of my short on gold, on my short on Newmont Mining. I held my GDX. So again, holding that and ultimately looking for further downside. It's a great bounce, but this is exactly why you take some off the table, right? So again, this is exactly why you take some off the table, pare back the risk because you don't know if it's going to bounce. And for all I know, it's going to go back up here and I can just reshort gold again because I took that profit and ran. I didn't get overly greedy and say, oh no, I'll only exit all three of my trades that were short essentially gold by GDX, Newmont Mining, and GLL long, which is a gold 2X short. Instead, I said, you know what? Let's pare it back as we get deeper in the money. So just in case it doesn't go here, I've pocketed some and I can always re-enter. And if it goes down here, then I still have one position left. And that again is how I trade. And it's honestly revolutionized my trading, folks, because we all have a tendency to want to maximize. We get greedy and we're always like, oh, well, it can go down to that level and I'm going to hold it there, or it can go up to this level and I'm only going to take profits when it gets there. And what happens? It almost gets there and then it reverses and we end up with a losing trade instead of a winning trade. And so by doing this, by legging in, but also legging out, it really protects and keeps the grind of profits going. At least that's what I found in my trading career. So again, a lot of stuff that's counterintuitive, but works in real life. It's pretty cool stuff. Silver, we were kind of hovering right on this support. Look at that, getting a bounce today, a beautiful little bounce. Again, no trade for me here on silver. I just don't see the reward at this point. I don't have a good enough read on it. But again, you have to be, give silver credit. So far, it's holding this trend line, this former trend line right here. We broke above, we came back in, we bounced. Then we broke here. This was on the panic in the market. So that went down here. But then look at how it reestablished itself right here. And that's kind of cool to see that it was able to reestablish that level. And it was kind of that freak out in the markets. That's the only reason it flipped below. But then it came back above. All right, guys. So listen. Earnings after the bell, Palantir, Hims, and Ford. Those will be the ones that I will be looking to trade after the after hours today. We'll be watching the markets throughout the day. Do they recover? Is there still strength here? Or are we seeing a turn at the gap fill Fibonacci level on the S&P target that has now been achieved? Needless to say, I did add shorts on Friday. If we rally, I'm not going to add shorts on a gap down today because I don't like paying down for shorts. But if we were to rally up in the next week or so, yes, I would continue to slowly DCA into short levels, believing this is a retrace, not a new bull run to new all-time highs. You guys have a great, great day. Good luck in trading, guys. Let's go make some money. Have a good one. Take care.